And away from the continent, these are the stories that we have for you on International Business News. A softer U.S. inflation figure has boosted investor confidence after Asian markets built on last night's strong performance on Wall Street. The tech-focused Nasdaq jumped almost 3% after the annual inflation rate dipped by more than expected to 8.5%, lifting hopes that the Federal Reserve may be able to slow the pace of interest rate rises. In London's session, half-year results from Entain showed the Ladbrokes, Gala Bingo and BetMGM businesses continue to trade in line with expectations after underlying earnings rose 17% to £471 million. Prime Minister hopeful Liz Truss's thoughts about how to manage the Bank of England are adding to a mounting list of threats to the value of the pound and UK government bonds. The current Foreign Secretary, who is leading in the race to replace Boris Johnson as Prime Minister, has stepped up calls for a review of the central bank's remit and potentially a new money supply target. While the remarks have been vague, analysts and investors are giving more thought to a risk that's not yet priced into the market. The worry is that Truss, if she takes office in September, may upend 3 decades-long focus on fighting inflation and tell policymakers to use tools that were discredited in the 1980s. That's adding to caution about the outlook for sterling and glitz, with the pound already suffering from questions about the health of the economy and public finances. Energy bosses will face pressure from UK ministers about how they can help customers cope with rising bills at a crunch meeting today. Chancellor Naheem Zahawi and Business Secretary Kwasi Kwarteng will press gas and electricity company executives for solutions to the predicted spike in bills over the winter session. The summit with utility bosses expected to take place in Downing Street comes after Cornwall Insights predicted bills are set to soar to around £3,582 in October from £1,971 previously, before rising even further in the new year. Zurich reported a better than expected 25% rise in operating profit to $3.39 billion in the first half on Thursday, with both its property and casualty and its life businesses outperforming expectations. Analysts had, on average, seen business operating profits at $3.28 billion, according to a company-compiled consensus forecast. Insurers are facing weak investment performance from market fails due to the war in Ukraine, and inflationary pressures are hitting their customers' wallets. And that's the international business news we have for you. After the break, a West African economic powerhouse is in need of assistance, and a credit rating agency seems to have made a bit of that just a little tougher. We'll have the details after this. Fitch Ratings agency has downgraded Ghana's long-term foreign currency issuer debt rating to CCC from B-. Now, this comes just days after S&P, another ratings agency, downgraded and dropped the country's local and foreign currency credit ratings to CC+C from B-B, pointing to the government's limited commercial financing options, and constrained external and fiscal buffers. Now, Ghana's economic growth is relatively strong. However, the country is in the middle of a debt crisis, and the cost of servicing government debt is getting terrifyingly close to consuming all revenue. The country's debt has largely been driven by the continuous accumulation of budget deficits, currency depreciation, and of budget borrowings. Downgrades are typically followed by reductions in foreign direct investment and capital expenditure. Joining me from Lagos, Nigeria, is Samuel Oyekami. He's a senior research analyst with Nairametrics. Samuel, welcome to Business Edge again. Thank you for joining me.
Thank you very much for having me.
So I want to start with this before we get to the Fitch ratings. Ghana seemed to have been one of the countries that performed quite well coming out of the COVID-19 pandemic, and we're just about a year plus out of that. and it seems that things have taken a turn for the downhill stretch. How did we go from Ghana performing well, being one of the standouts during COVID-19 and slightly afterwards, to the situation Ghana finds itself in now?
Oh, the truth is that Ghana for a while also have not really had it very good when it comes to the fiscal environment. Yeah, they did well in terms of economy, macroeconomy during the COVID-19, but of course their fiscal balance has not been has not been spectacular. And then the Russia-Ukraine war, starting from February, actually opened them up to a lot of issues, and that's what we are seeing here right now, because you see that their exchange rate has depreciated significantly year to date. I think about 30%. Their stock market is also not doing as well. Also, euro bond yield has also gone up significantly, almost a junk security at this point. So really, a lot of things a lot of effects that the Russia-Ukraine war has hammered upon the COVID-19, especially for most African nations. And that's what you see Ghana experiencing right now. They are also exposed to a lot of importation. And then with the hike in energy prices, food prices, supply chain issues around Russia, Ukraine, and in China also, where we're also having some form of COVID reoccurrence. So yeah, that's really why we are seeing this drastic turn from a relatively good performance to these abysmal numbers.
So it's one thing if it's one credit agency that downgrades you, but at this point right now, it's both Fitch and Standards & Poor's S&P Global that have downgraded, and we'll get into what that downgrade means. But what do you think these agencies are looking at in bringing down Ghana's ratings?
They look at a number of factors, and one of them is their credit worthiness and their potential to be able to repay this loan based on their fiscal balance. And of course, I said earlier that Ghana has been experiencing accumulated negative fiscal balance in recent years. And then you look at the fact that they have to take so much external loans, in order to be able to meet this obligations. Unfortunately, their economy is not really friendly even to foreign investors right now. And then their Eurobond is more like a junk. Nobody's bringing, and nobody wants to buy their Eurobonds. And right now, if you don't have access to foreign inflows and you don't seem like you even have the capacity to repay loans, this is what you see happen to your credit score. And do not forget, also in February, Moody also downgraded them in the same vein, and then S&P. And just days after, we are seeing Fitch also downgrading them downwards to a CCC. And of course, all it just tells you is that they are not doing so well. They don't look like an economy that has the potential to be able to repay loans, and they are not quite strong. But of course, things could turn around, but based on the Fitch ratings, what they look out for, they look out for your debt, your exposure to external debt, and how viable is your purse or your economy is to foreign investor. Right now, it's not really good.
So we know that a poor rating is going to be just another nail, unfortunately, right now for Ghana, as you've talked about. It's going to be a very difficult situation for the country to get money from the markets, and of course use that money as they've been using. If Ghana is to look for another source, not being able to go to the global credit markets, what sources are currently available for Ghana as it stands?
We could see earlier in the year, Ghana's government were kind of very skeptical and obstinate that they would not go to, for example, the IMF for some form of program. But I think around July, they've been able to come to terms that the numbers are really not doing well. And you remember in July also, we had a form of protest for like 2 days that really escalated in Accra, Ghana. And so with that, they're able to walk up to IMF to be able to work out some form of funding plan that's going to help them. Of course, that's an option. And if you remember also in July, the parliament also approved a loan of about $750 million from an institution. So of course, where they have opportunities right now is to go to multilaterals to have some form of arrangement. And the belief is that if IMF can be able to give them this funding, of course, that could help in also attracting some other multilaterals to be able to give them funding in any form of loan, restructured loan, or whatsoever. But those are the options really available to them, except if someone is going to come for a bailout some other bigger economy. I don't see that happening because most economies are also facing their own downtime right now.
So let's stick with this IMF situation. We've talked about it with some of our guests, but it was just last month that Ghana went to the IMF, and of course we heard from the finance minister as well. And some thought it was to stave off this, that they saw this credit downgrade coming, but they wanted everyone to know that they were trying to get ahead of it. And even with the agreements and the conversations, it just hasn't been enough for either the S&P Global or as well Fitch Ratings. In terms of this IMF loan, with all the factors in play, if it goes through and everything is set, do we expect a potential, maybe a return to more stability or probably a reversing of the outlook in the coming months, or rather the credit rating in the coming months towards the end of the year? Is the IMF deal enough for a Fitch or for an S&P to say, okay, we see some movements, we see some action, we can at least give them some breathing space?
Possibly, yeah, but I don't really see that happening so well because so what the IMF funding can really do for them is to also give them a soft landing for other multilaterals and possibly foreign investors to be able to buy into them, because of course there will be some more liquidity, some more flow in terms of cash in the economy, and that could also expose them more to other multilaterals trying to fund them, really give them some form of loan or some program. But that I don't see that as being enough, because when you look at the program, how much of it do you think they are going to get? Because at the end of the day, do not forget that they still have revenue crisis. They had to cut down their expenditure from the 2022 budget, and a lot of the bills that has been passed that's supposed to help them increase their revenue has not really been materializing, because we're one of the reasons why protesters had to go to the street of Accra last month was because of the tax bill and increased taxations on them. And that is supposed to help the fiscal side. But if that's not materializing, it tells you that there's still a long way to go. They really need to also tackle the inflation rate, which has really hit a record high. Yesterday, they recorded inflation rate over 30%. That is really that's like the highest in about since November 2003. That's really huge. So there are a lot of other things that they need to tackle. One of them is to reduce expenditure as much as possible, if that's possible. Increase revenue. Increasing revenue now based on taxation is not really, I don't think it's really, now is the right time because of the inflation. But if there's a way, but of course, we've seen a lot of hawkish move by the central bank, increasing interest rate in order to stabilize the depreciating currency and then the increasing inflation rate. I know towards the end of the year, we're going to see that moderate a bit. And with that, we could see some turnaround, and then you see the rating agencies probably elevating them a bit.
So I have an interesting question for you before we go on a break, and that's because Fitch has specified that they do not assign outlooks to countries that have a CC plus or below as a rating. And these outlooks are a lot of the things that investors will look at in terms of what they see as the projections and the estimates for how the economy will do. What do you think this means? Is there really an impact that Ghana will feel from possibly not having an outlook from an entity such as Fitch?
Okay, so we'll probably want to start from understanding what this CCC it means. According to Fitch, it means very low margin for safety. Default is a real possibility. And I think that's quite clear enough. And then for a rating agency like Fitch, I don't think we do necessarily, for an investor now, you do necessarily need so much outlook when it comes to this, because they have given you a semi-red light that this economy is not really doing well. Now, if you're going to make decision, it's going to be based on the steps that you see that the country is really making at the point that could take them away from that score. But as of right now, that score or that rate where they are is already telling investors that, oh, these guys could actually default on credit. So if you are lending them money, you are likely to have a bad debt or something. So of course, that's really clear enough for any investor. And on the side of Fitch, I feel, well, they are like 4 steps to the last rate when it comes to the worst rating. And of course, they just say, oh yeah, we are not giving outlook because they are already a red light. Going
so
forward,
there's almost no point.
When we come, Yeah, there's really no point in that.
Okay, so we're going to talk about that debt distress because we've been following it closely, but let's still stay on Fitch. This is the second time that Fitch has downgraded Ghana, and that's happened this year. And we've heard from Finance Minister Ken Ofori-Atta, who has previously accused Fitch, Moody's, S&P Global, all these global credit rating agencies of being institutionally biased against African countries. And we've also seen a situation where the rating agencies, they're not God, and they've been wrong before. So do you think there might be some form of bias against African economies with a lack of true understanding? Because when he made these comments earlier this year, I know that there was a time Fitch had just released their reports, but the person who was meant to investigate or look into the Ghana situation had probably just resumed around less than a month before the report was released, and there were all these issues around, did the person really understand that the issues of the economy? And then, of course, we've seen that the ratings agencies have, at one point in time, even been linked to global financial crisis. So, one, could they be wrong about Ghana? And secondly, they're not God. Do you think there might be some bias against African economies?
So while we Africans are always so quick to judge any international, multinational towards us and biases, I really do not think so, because in this case, this is not the first or the second rating agency that has downgraded Ghana. Like I said earlier, earlier in the year, Moody also downgraded Ghana. And then when you're talking about being biased, you do not forget that many other countries have also faced some form of downgrade this year. Russia earlier in the year also had their rating also downgraded, and some more other European countries. And the truth is that the entire world is facing dire times right now because of the Russia-Ukraine fallout that has sent the prices of crude upward. So any country right now who is exposed to a lot of importation would definitely have to face some form of deficit, either in terms of trade balance or in terms of current account balance, and that also affects this rating. So I don't really think they are really biased, because look at the economy itself. Ghanaians are actually bleeding. At some point, I had them calling out for the resignation of their president and a host of many other things. If you check Twitter those days, about last month, 2 months ago, we had them calling out for their president to resign. And this just tells you that even the people living in the country do not have it so nice. They are not happy with what they are saying. So if an agency is saying that, oh, you're not doing well, I don't think that we should see that as a bias. And of course, they are not God. And it is not impossible for Ghana to turn these around. There have been events in the past where economies find themselves in this situation and were able to turn it around with just a tweak of one or two policies, and you see things moving around. But right now, they are facing a double or maybe triple whammy problem, because the globe is going through an economic problem. Africans who are net importers of almost everything are also facing huge imported inflation. If you look at the numbers yesterday, you see that they had more increase when it comes to imported inflation, even more than domestic inflation. It just tells you that they are quite exposed to what is happening in Europe, in other developed climes. And that is really why they are facing this much problem. About turnaround, it is very possible. I think they just need to go back to the drawing board and then make a little bit of arrangement here. IMF is one, and they could go to the AFDB, go to probably the World Bank also, make some arrangement. And before you see there's improved cash flow, and then we will see a turnaround in the economy. But first, they need to tackle inflation.
All right, so let's talk about some of the turnaround, because Ghana says that the government, believes that it has made bold policies that could address macroeconomic challenges and debt sustainability that should have saved it from the potential of being downgraded. Now, you mentioned, of course, taxation, and the e-tax, the electronic tax, was very, very unpopular with the Ghanaian people. And so far, I think it'll be about 2 months now that the tax has been in place, it has not actually brought in the amount of money it was projected to bring in for the Ghanaian government and the economy. Do you really think that Ghana had policies in place that would have saved it from being downgraded?
Okay, so well, in the defense of Ghana, they last their 2022 budget had a form of 30% cut in their discretionary expenditure, and then also puts a number of policies in place that is expected to help their fiscal side, help their revenue. And one of them was the FDA fees and charges bill, the tax exemption bill, the e-levy bill, all of which was expected to help improve their fiscal. But then 2022 has been hard on a lot of people. So even when you set aside or you set in motion some policies, because of unforeseen circumstance that the Russia-Ukraine war has brought, it just could change a lot of things. So in the first place, to be fair on them, I feel, yeah, they did, they saw their fiscal balance is not doing well, and they realized before the year and tried to adjust their money, their fiscal budget, and which we saw, of course. But then the issue around Russia, Ukraine has really turned things upside down. But really, I feel there's always a way ahead.
Okay, so final question as I let you go, Samuel. Fitch says they are at risk of debt defaults. We know that Ghana has been identified as one of the countries, along with Ethiopia and Kenya, that is in debt distress. We are all very, very worried. There's the potential, as you said, of the imported inflation that might put Africa back into reflation with our economies, a recession with our economies. But let's really look at this. How much of a risk is Ghana's economy at right now? Do you think there is truly a sincere, genuine potential for debt default, given the circumstances that Ghana is facing right now?
I'll be optimistic here.
I don't want optimism. I want realism with this answer. Let's be realistic with this.
Okay, so based on the move by the government of Ghana last year with the IMF, although that is not going to come anytime soon, I feel the funding is going to come, at least it's going to take about 4 to 5 months. But if that was to come in place, and then with the 750 million, they also approved the last month, and I think they also have some form of other funding. I think their reserve also is also a potential position for them to take funding from. I do not see them defaulting. Really, it takes a lot for an economy to default on debt, because it has severe implication on how that economy is being perceived. So as far as there is an excess amount somewhere that can be used as a buffer for this, I feel they will always be able to explore those options. So I don't really see them defaulting, either because they are going to have to look for alternative means to be able to meet up with those debt obligations, or they go to multilaterals. But at the end of the day, no country would really want to default, because it does not say so much about the government in power. It does not say so much about the economy. It's going to affect foreign direct investment, foreign portfolio investment. It's going to affect a whole lot of other things. It's like a ripple effect. No one is going to do that. So I do not see them defaulting. However, they are really in their position right now.
All right, and we'll all be looking at that. The second largest economy in West Africa, definitely has been a shining light for a number of years. So there is a lot of vested interest in making sure that Ghana does not go that route. Samuel Oyekami, thank you so much for joining me from Nairametrics.
Thank you very much for having me.
And we've been hearing about debt distress on the African continent for a number of years now. Some countries have been highlighted in recent times, with the Russia-Ukraine crisis adding pressure on their economies, that there is the potential for defaults, but the stress is where we are now. We'll be watching out to see how those things play out. Are they getting as much help as they could? Is there any potential for them to bring out some kind of salvo at the last moment? And in the long run, as long as these global economic headwinds continue, with the continent importing inflation, the pressure will continue to be on. You're watching Business Edge. The pressure for me is to give you NC4 to watch. You get that right now. And here are a few stories we're keeping our eyes on with NC4 to watch. Now, the results of a test performed in Germany on the same shipment of coffee that had been reported as having exceeded the minimum level of chemical residue in Japan came back negative, providing a new prospect on the earlier findings. According to Theophilus Mutui, Managing Director of the Kenya Plant Health Inspectorate Services, a test performed on the same coffee samples in Germany came out negative, and the identical test had also come out negative, casting doubt on the Japan-based methodology. The Central Bank of Kenya stated in its July 2022 financial stability report that the banking sector forecast for 2022 is stable and resilient, supported by adequate capital and liquidity buffers. For sustainable economic recovery and financial stability, careful policy balancing between stemming inflation through tightening policy rates and retaining accommodating monetary policy is needed. Egypt Air has started operating private flights from Sharm el-Sheikh to Mitiga as part of the Ministry of Civil Aviation strategy to activate air traffic and tourism arrivals to Egypt. Private flights between the two airports will continue until October 11th to transport tourist groups from Libya to Sharm el-Sheikh in coordination with the tourism services company in Libya. And they have agreed to one flight per week that will be operated between the two airports. And finally, on NC4 to watch, the electronic money transfer levy is expected to generate 483.73 billion naira for the Nigerian government over the course of 3 years from the growth of electronic payments. In its midterm expenditure framework and fiscal strategy paper for 2023 to 2025, the Budget Office of the Federation produced the forecast. The Stamp Duty Act was modified by the Finance Act 2020 to include the EMTL in order to take advantage of the country's expanding use of electronic payment transfers. A single one-time fee of 50 naira is applied to any amount above 10,000 naira that is electronically received or transferred from any bank or financial institution that accepts deposits. And that's the business we have for you on this episode of Business Edge. Thank you so much for joining me. Don't forget to follow us on social media. We are at News Central TV. You can also download our mobile app, subscribe to our YouTube channel, and watch us on the platforms we are available. Until next time, I'm Tolu Lokwe Adeleru Balogun.